Inflation Simplified: Why Your Money Buys Less. Have you ever wondered why a cup of coffee that used to cost you $1 now costs $3? Or why the groceries you bought last year seem dramatically more expensive today, even though the items in your basket haven't changed? Welcome to the quiet force that's subtly reshaping your wallet every single day: inflation. Let's step away from intimidating charts and technical jargon. Instead, imagine your money as ice cubes. When inflation rises, it's as though the room around your ice cubes is warming up, melting away their purchasing power, quietly, steadily. Your dollars haven't vanished, but they don't last as long or go as far as they once did. First, let's understand clearly, what exactly is inflation? Simply put, inflation is when prices rise and your money buys less over time. Imagine you're Anna. She's 30 years old and carefully budgets every dollar from her paycheck. A few years ago, Anna comfortably spent $50 a week at the grocery store, bringing home bags of healthy food. Today, with the same $50, she's finding herself choosing between items, cutting corners, or increasing her weekly budget just to get the same groceries. The money itself hasn't changed, but inflation has reduced its buying power. But why does inflation happen in the first place? One major factor is demand. Imagine a popular new phone is released, and suddenly everyone wants one. If the supply is limited, prices go up. Now apply that to an entire economy. When people have more money to spend, maybe wages are rising or government assistance increases, there's more competition for goods and services. That competition gradually pushes prices higher. Another cause can be rising costs for businesses. Think of Josh, a small bakery owner. If the ingredients he uses every day, flour, sugar, butter, become more expensive, he'll eventually have to increase the price of his bread to maintain profit margins. This cost increase ripples through the economy, pushing prices upward across all sorts of products and services. Inflation can also be fueled by how governments manage their economies. Printing more money might seem like an easy way to pay for programs and expenses. But think of each new dollar printed as watering down a pot of soup. It may look like more soup, but each bowl offers less nutrition, less purchasing power per dollar. Now let's zoom out. What does inflation mean for your future? Consider James, a young crypto investor who keeps most of his savings in a traditional bank account, earning minimal interest. He's cautious and doesn't like risk, but as inflation quietly climbs at, say, 5% per year, the savings James feels are safe are actually shrinking. If he isn't earning at least as much as inflation, his savings lose value every day. Understanding inflation nudges James toward investments, perhaps into diversified stocks or stable cryptocurrencies like Bitcoin, to help him preserve his buying power over time. This might feel a bit intimidating, but dealing with inflation is simpler than you think. First, consider investments that historically beat inflation, like broad market ETFs, stocks in strong companies, or, if you're comfortable, stable cryptocurrency. These assets usually rise in value faster than inflation eats away your purchasing power. Second, increase your financial literacy. The more you understand how money works, the easier it becomes to protect yourself. For example, Sarah, a freelancer, realized she could automatically put a small portion of every payment into investments that outpace inflation. Today, she's building long-term wealth effortlessly. Third, be proactive about asking for raises or increasing your earning potential. If the price of your groceries, rent, and utilities are rising, your income should ideally keep pace, or you'll quietly fall behind. An extra certification, online freelancing, or negotiating a salary bump can help you stay ahead. But now, let's briefly journey forward into a possible future, perhaps 10 years from now. Imagine waking up to your financial AI assistant quietly alerting you that inflation just rose by 0.5% this quarter. Immediately, without you lifting a finger. Your investment portfolio rebalances itself to hedge against rising costs. Simultaneously, blockchain-based smart contracts automatically adjust your savings allocation, shifting into assets designed specifically to outpace inflation. Taxes are automatically calculated, optimized, and filed through blockchain networks, ensuring maximum efficiency. Your wealth preserves itself, adapting seamlessly as inflation fluctuates without you losing sleep or feeling anxious about the future. In this futuristic scenario, your money management becomes intuitive, personalized, and proactive, driven by emerging technologies that might sound like science fiction today but will become the norm tomorrow. Coming back to today, what's the main takeaway here? Inflation doesn't have to silently erode your finances. By understanding why prices rise and taking thoughtful, manageable steps, such as investing smarter, learning actively, and earning strategically, you can confidently keep your money growing ahead of inflation. And here's a memorable money mantra to keep in mind. My money grows where understanding flows. Repeat it, embody it, and watch as your financial future becomes meaningful, manageable, and secure.